Good afternoon, welcome to Grain TV. My name is Cody Bills. Today is Tuesday the 10th and we had a WASDE report out at 11 o'clock Central Standard Time today. But before we get into that, let's turn over to the Grain Hedge trading platform and see where we closed off the day. Corn trading down a penny, soybeans down 9.25 cents, and wheat in Chicago trading up 4 cents on the day. Now going into this morning's trade session, we did have the US dollar putting pressure on commodities here, up again after breaking through those highs just 5 days ago here, breaking through those highs that were set back in January. Seems as though we're trending higher here as the US dollar gets more and more strength. It really is making it more difficult for commodities based in US dollars to compete on the global markets. But now let's talk a little bit about the WASDE report here, because this is one of the major market movers here today. As soon as they released it at 11 o'clock Central Standard Time, we did see corn move higher here. The reason behind that is ending stocks. Take a look at the corn ending stocks. We saw 1.777 billion bushels here for ending stocks. Bottom line is this is less than analysts were expecting. In the February report, we had 1.827. Analysts were looking for only a 1 million bushel revision. They got a 50 million bushel revision, and that on the whole here just boosted corn. What we saw is an increase in feed and residual use. We saw an increase in export sales, and we saw a decrease in ethanol output. It's going to be interesting to see whether or not that ethanol output shows itself here in the weeks to come. Ethanol is still running well ahead of last year's pace, and I would expect, I guess, based on these USDA expectations for ethanol production, I would expect here production to significantly decline in the weeks to come. We'll have to see if that pans out. Soybeans here coming in with 385 million bushels for ending stocks. That was a surprise to the market. Of all the commodities here, analysts were expecting soybeans to have the largest revision, and they were expecting a revision lower. Ending stocks here would be affected by export sales, and of course export sales are running well ahead of pace to meet USDA expectations. Just last week we were about 97.7% sold when you think about meeting the existing export sales projection. What that means, we have only about 1.08 million bushels left to sell. It's looking as though, because the USDA did not revise export sales in this WASDE report, it looks as though they're anticipating a significant decline in export sales in these export sale weekly reports coming down the pipe here over the next few weeks. Take a look at wheat here. One thing you'll notice is that we did get a revision lower, only by 1 million bushels. But the bottom line here is that analysts were expecting an increase in ending stocks. They were expecting about a 7 million bushel increase in ending stocks. They didn't get that. They got a 1 million bushel decline. That helped put a little bit of a bid under wheat, which has been badly beaten down here by selling pressure in the last few weeks. So just providing a little bit of a reason here for short positions here to cover. Now let's talk a little bit about global ending stocks. Corn, soybeans, and wheat. Of all these commodities, corn had the largest revisions. Soybeans and wheat really didn't have much of a revision here in the global ending stocks. But take a look at corn. You'll notice it went from 189.64 million metric tons back in February to 185.28 million metric tons in March. The revisions that we saw here were, of course, the demand out of the U.S., which lowered ending stocks there, and we also saw a significant decline there in Argentina production as well as South Africa production, which was really moved lower by about 2 million metric tons. So the bottom line here is that when you look at global ending stocks and U.S. ending stocks, corn here had a nice little bullish report. How much is this going to weigh on markets going forward? Well, I think first of all we got to look at the chart. When you look at the corn chart on the daily, this is a daily candlestick corn chart. Each one of these bars is representing 1 day worth of price activity. First of all, I think these numbers were positive. I wouldn't be surprised. You can see in today's price action, you can see that we were trading lower in the very beginning part of the day. We ended up trading higher following the report, closing off right about unchanged. I wouldn't be surprised if we do move higher, that this overhead 100-day moving average and 50-day moving average, which are crossing each other right now, which tends to be a bearish signal here. I wouldn't be surprised if we get up around those levels that we have significant selling pressure around those crossing moving averages. So I would suspect that is a very important resistance level if we're able to put on a little bit of positive price action here in the days to come. Bottom line though, traders are really going to be focusing on that March 31st planning intentions report. That's going to be a critical driver of trade here in the weeks to come. So I think people are probably going to shake off, traders are probably going to shake off the numbers that came out here today as early as really Wednesday, Thursday this week, and really start focusing on what's coming down the pipe. That is going to be the major market mover. Let's talk a little bit about soybeans here, because this I think is also an interesting chart. You'll notice last week we really saw significant selling pressure in soybeans, but Friday we were able to find a little bit of support here. Big old doji able to close near the highs, kind of signaling that perhaps the selling was overdone and we're going to get a little bit of a rebound here. We got that rebound follow through on Monday, but this report just didn't do anything to help soybeans, and we're unable to hold on to those gains that we saw yesterday. Seems as though it's a bit of a turnaround Tuesday here in the soybean complex. I wouldn't be surprised if we see some weakness here coming down the pipe tomorrow. Guys, that wraps up today's show. If you have any questions about what we talked about today, give us a call. The number's 877-472-4607. If you haven't done so already, go ahead, take a demo of that Grain Hedge trading platform. You're going to find how easy it is to monitor quotes when you're out and about and you're away from your desk. You'll be able to monitor your positions, monitor your quotes. It's just a responsible decision as a producer. Thanks a lot for tuning in. We'll see you here tomorrow.